Welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to look ahead with Facebook stock into 2021 and beyond. With this whole bull market going on, Facebook's pretty much stayed kind of flat really over the past 3 or 4 months. So we're going to talk about Facebook stock and is it one of the better undervalued plays for 2021? Or are some of the pressures that's being put on Facebook in the political arenas, does that make it one to avoid? Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before taking on any investment. And of course, if you like stock market analysis like this and other personal finance videos, then please subscribe to the 40 Finance channel. Give this video a like. Thank you to everyone who supported the channel. Looking forward to an awesome 2021. All right, before we take a look at the fundamentals of Facebook stock, I want to do a quick recap on what is basically the bad news and the good news for Facebook as it stands today. Looking at bad news first, obviously the political climate in America has been very sour over the past couple months heading into the election. There's been a lot of events, there's been a lot of opinions, and at the end of the day, social media found itself right smack in the middle of it. But I think what's really different right now is sort of the censorship aspect of things, whether it's deleting accounts or muting certain people, fact checks, etc. That is always going to rub Americans a little bit wrong, regardless of the outcome, because of the belief in freedom of speech. So Facebook and other social media platforms have taken a big hit there, and it wouldn't surprise me to see a lot of people do the sort of quit social media movement and bring Facebook and other social media platforms numbers down. The question, of course, always becomes, how active were those users? What do they really mean for the business bottom line? All right, so outside of politics, Facebook has had other headlines that are basically negative. One of that would be the WhatsApp privacy policy changes. So one of the key features of WhatsApp is the fact that it is a private communications channel. But what users are mad about is that WhatsApp now reserves the right to share data such as phone numbers, IPs, payments, and other Facebook-owned platforms like Instagram. It also says if people use WhatsApp to talk with businesses that use Facebook's hosting technology to manage those chats, those messages could be used by the business to target with ads. So these updates have brought about a sort of fleeing of the platform to some degree, and there's a lot of folks that are looking at Signal or Telegram as options to take their private messaging to another place. All right, and finally on the bearish news, you have the government looking at monopoly practices. You have the government looking at data privacy. I personally think that those two areas will be a much longer run before we hear anything about it. The monopoly stuff, I'm not even sure that will come into play at the end of the day. But data privacy will almost certainly come into play within the next 12 to 18 months. So that's one to watch. So of note, you got political censorship concerns. You have the WhatsApp dust up that came out here recently on privacy. And then you have government. And so all those things are kind of weighing down on Facebook as well as other social media stocks and making them essentially flat over the last several months. All right, so that's the bad news. Now on the good news side, which we are going to see a lot of in the stock fundamentals, is that the business of Facebook is chugging right along and they are still printing money, and they have, oddly enough, become almost a value play in this very expensive market. So let's take a look at the stock and see how the business of Facebook is doing as we enter 2021. All right, stock price today of $253.03. This is at noon or so on Friday. And interesting enough, with this plus 3% that's hovering around, the actual market today is sort of in a downward stretch, sort of 0.5% to 1% down, at least on the NASDAQ. And from a fundamentals perspective, you see this is a one-year chart. So you see that prior to the pandemic, we had a price of about $215, maybe as high as $217, then the dip. And Facebook has crept up a little bit. They reached a high on August 24th, almost $300. Then we got into the sort of political stretch of the year, and you can see that things have sort of dragged on it, and now you're down to 253.05. That number gives you a P/E ratio of 28.88. EPS through the trailing 12 months at $8.78. So even on these forward-facing metrics, you kind of have a case right off the bat with a PE under 30, strong EPS, and of course you know that the stock has recently almost come close to $300, so those are some positives. Let's take a look at the other statistics. All right, if we browse through Facebook's trailing PE over the past several quarters, kind of go back to when the world was normal, so to speak, you're in that 32-30 range, and today you're right at 30.61. Today you got a forward PE of about 24.69. Prior pandemic, you were riding in the 18 to 22 range. So for all intensive purposes, at least in the scope of this statistical look, you know, Facebook's value is very similar to what it was offering you back in 2019 prior to the pandemic. So in terms of its peers, I would definitely say Facebook is one worth considering from a value perspective. And some of the comforting things from a business perspective, you got a profit margin of 32%, operating margin of 30%. Revenue in the trailing 12 months is almost $79 billion. And one thing that most people call out, you have a cash position of over $55 billion. Debt load around $11 billion, no real concerns there. Also notable, at least from my perspective, is the short percentage of Facebook is under 1% as far as short percentage of float. So for as much as people are banging pots and pans about Facebook and their demise, very few folks have put money on that bet, at least in terms of the amount of shares that are outstanding. All right, let's talk about where analysts see Facebook heading into 2021. Their earnings call comes on, I believe, January 27th. Let me check. Yes, January 27th for the earnings call. But back to the analysts for a second. The current quarter EPS projection average sits at $3.19. Last year, they were at $2.56. From a fiscal year perspective, they're expected to land at $9.35. And the year ago was $6.43. But you look ahead to next year, you do have a little slowing of that, at least in terms of what people are projecting for now. But it'll be interesting to see how this number really develops over the course of the year, because I think a lot of this slowing EPS growth is based around the thesis that the pandemic helped Facebook, and when it disappears, it will not help as much. I tend to disagree because a lot of advertising categories are coming back online, such as travel, but we'll see how it goes. All right, on the revenue line, if they hit the average estimate, you got $84 billion, up from $70 billion last year. That would be a 19% increase. Then we look ahead to next year, you go from $84 billion over to $104 billion if they hit their average estimate. That would be a 24% increase in revenue. And lastly, we like to look at the growth rate estimates. Let me see if I can fix this so that you can see it better. Here we go. Yes. So you have, at the end of the day, current quarter growth 24%, current year 45%. Next 5 years per year, you got an average estimate of 16% per year. Now that is down from the years before where you were averaging about 42%, but this only factors in what we know today, right? So from a 5-year perspective at 16%, that's still pretty strong, and it makes the assumption that Facebook's world today is the same world 5 years from now. I find it hard to believe with $55 billion in cash that they wouldn't make some sort of play somewhere, but we'll have to see what happens. All right, let's compare our growth rates over here at Morningstar. From a revenue perspective, they're calling for a jump from $84 billion to $111 billion to $134 billion, which works out to be 18%, 32%, and 21%. So Morningstar is a lot higher on their revenue growth, but this was actually since October 30th. And I don't know how much the election environment would have changed, but there was obviously a lot of political actions that happened during that time. And I don't really think many of them would be considered super awesome for Facebook's business. So I would suspect that this number comes down, at least in the short term. On the EPS front, you got $8.56 for 2020, $11.05 for next year, and $13.63 for the year after that. That translates over from a forward valuation. They see PE ratio would go from a 28 down to a 22 if you use their projected 2021 earnings. And then even further down the line, Facebook would get into PE of 18 if you use 2022 projections. All right, taking a look at TipRanks to see what the best performing analysts think about Facebook. My affiliate link for TipRanks is in the description if you're interested in learning more. I have used this platform regularly for a couple years. It's very helpful in organizing all the inputs and ratings of a stock in one place, so definitely check it out. From a Facebook side of things, we always try to sort by 4- and 5-star analysts. That way we can get rid of some of the noise. And we always sort by date, so we want to have, you know, the freshest opinions. So given what's happened in the political climate here of late, as well as the WhatsApp privacy concerns, we'll take the freshest that they've got, which is about 24 days ago, all the way up to today, and it's buys across the board. In fact, if you go back even 3 months ago, here you have one hold from 3 months ago, but it's buys across the board, significant upside in terms of what we see trading in the market today. And ultimately, analysts are seeing, you know, well over $300 over the next 12 months. All right, so is Facebook stock undervalued as of today? I think all the evidence suggests yes. I mean, even if you want to factor in a discount for some of the things that are weighing on the stock right now, when you compare the business and the profits to what the rest of the world, rest of the stock world is doing in terms of valuation, Facebook is definitely a laggard at this point. Kind of funny to say that, but if you have a, you know, tech/media type company coming in at 28 times earnings, and then you look over at something like a Pinterest that is running much, much hotter than that, you would have to consider Facebook if you want to make the best value buy for your portfolio. Now, on the flip side, of course, you have some concerns about what is the perception of Facebook in the wider audience here in America. But don't forget how much international exposure they have and how much money Facebook has to basically fix any problem, right? So when you talk about Instagram and WhatsApp and you look off into international expansion, that's where a lot of the meat is on the bone. So things that happen here in America are definitely important because Facebook's an American company, but it doesn't really change, I think, the trajectory of their growth rate when you factor in international. So keep that in mind. All right, guys, let me know what you think about Facebook stock here in 2021. It's hard to believe, but we might call Facebook a value stock here in these days. And with that growth rate, there's a lot of positives to look at here. And when you factor in that growth rate, there's a lot of positive things to consider depending on how you want to invest your money. So leave me a comment below, and we'll see you on the next video.